What's up, guys? Get it going in a second. How's the sound? Just give me a quick sound check. Then we'll be good to go. Hopefully the background noise is now barely noticeable. I am from Brazil. I am from the United States. Okay, sounds good. Cool. All right, what's going on, guys? How's everybody doing? It's a new year. It's the first week of the new year. I'll get started in a minute. I'm just going to give people time to catch on to the Twitter post and say what's up to everyone in the chat. It's been a while since I streamed. I was on vacation for the last, since Christmas. Just got home, so I want to get back into the swing of things and hopefully start putting out more YouTube content. I see some familiar people in the chat already, which is nice. What's going on, David? David, you could call me by my real name. For everyone who doesn't already know, Clark, Kenner and Clark was my old Twitter name, and Clark is actually the name of a horse. My name is Ryan. So, let's see. Maybe another minute or two. Decent amount of viewers, actually, and I'm surprised because normally I just fall off the map when I fall off the map. So, if I don't stream for a week or two, the algo doesn't really favor you. So I'm surprised to see that we actually have a decent turnout so far. Ivanio, Javier, Alan. I'll take a look at the questions shortly. I'm going to try to keep this short and sweet. I'm hopefully going to keep this just around an hour. And I don't want to waste anyone's time. It is Sunday evening. Well, Sunday, 4 p.m. New York time. And I would like to get off this at some point and put my daughter to bed and have dinner and call it a night. So, yeah, big week. All right, I think we're good to go. I'm going to go ahead and eliminate my face right now. I just wanted to show the face, show the Mickey shirt, because that's where we went. We went to Disney World, which was really nice. My daughter's only 1 year old, so there's some debate about whether or not it's for the adults or if it's for the children. My wife is a big Disney fanatic, huge Disney fan, huge Harry Potter nerd, that type. So naturally, I think my daughter will fall into the same interests. And to be honest, I enjoy myself as well. My daughter actually was able to. It looked like she was looking at everything with a sense of wonder, which was nice, and I enjoyed that. And I enjoy spending time with family, and you should too. It's very important, obviously, to have sort of that balance. Okay, let's get into it. Let's get rid of the face and the Mickey 2024 hoodie. One thing I will say, Disney is an incredible company. They make it very easy for you to just ring that cash register with the bracelet, right? When you're in the park. We stayed in the park. We stayed on a resort. And I feel like I bought a hoodie every single day. I would go out with just like a light shirt or, a light hoodie. And I was actually pretty surprised that Florida was that cold. Idiotic, right? I just hadn't been to Florida in a long time. And didn't do my research. And, I'm from New York, so I shouldn't have really been bothered by temperatures in the 40s and 50s, but needless to say, I was underdressed, and every single night we were out, I was buying a new hoodie, which I'll probably never wear again, or probably just wear the next time that we visit there. Anyway, let's get to it. Before we get into anything, as a reminder, none of what I say is financial advice. Strictly for entertainment purposes only. I'm just, giving you a view of the market through my lens, right? Providing my color, and that's really it. I don't want you guys to take what I say as gospel. I think over the long run, I tend to average out, right? So I hope to be right I would say 50 to 70% of the time when I'm doing really well. It's obviously, the higher end of that spectrum, but I don't want you to take anything I say and go make any financial decisions. We don't have the same risk profile. We don't have the same lifestyle. We don't have the same experience. So, and not for nothing. There's a lot of times when I say things and I change my mind very quickly after a stream, and I don't stream consistently enough to really keep everything up to date. But what I will say is that I share most of my trading ideas in depth on the streams when I do stream, and I will very rarely share positioning on Twitter. Occasionally when the market is moving on momentum, then you will see me share alt setups and trades that I am in or either interested in or currently in. But to be honest, during those periods, it's really easy to hit pretty much anything, right? It's a very rewarding environment. We went through a very rewarding period over the last few months. And I share what I think as a decent setup, but there's a lot of trades that I'm in that I don't even cover. And I just think that my experience online is better that way. It gets pretty nasty when you have a large following. And honestly, I can't be bothered. And I am the kind of person that has to bite my tongue because it's always been kind of within my nature to be snappy and to slap back, we'll say, and break balls. It's just kind of the person I am. I grew up in an Italian and Greek household, kid from New York. So that's just in my blood. And I don't really like doing that online. It's just a waste of fucking energy. So whenever I am on YouTube, that's when I'm going to get into more of the nitty gritty and the nuance. And again, go into a little bit more detail about my positioning and my, my portfolio, my approach, yada, yada, yada. So I'm going to talk about a few things. It's been, let me get rid of this mail update. It's been, it's been a couple weeks since I've streamed, but I've been gone since, I'll say last year, since New Year's Eve. Prices largely in the same place as they were before I left. So we're going to look at BTC, obviously. We're going to look at the alts that I'm honestly most interested in. I think that obviously there's a ton of things that have been popping off left and right. I don't think that they're sticky. I don't think that they're going to be things that necessarily are going to be, quadrupling in market cap over time. There's so many things that have run, and I would say that they've run without real merit, and they've just run because there's animal spirits. I want to focus on, if the market does kind of loosely what I expect it to do, I want to focus on the pairs that have been consistently strong throughout, that are, in my opinion, and according to what I think is the sort of, Keynesian beauty contest that's taking place, the market's opinion of what is, better pairs, where the market is focusing most of its attention, what seems, again, when I say sticky, I mean something that's likely going to be lasting. And a good example of that is Solana, right? It was darling the last cycle, performing exceptionally well this year. It was a call that I made earlier in the year. Solana, one of my favorite alts, it's done exceptionally well. And I've actually sold, I sold the bulk of my Solana trade the day after, New Year's Day, at 3 minutes after the clock struck. While my wife is watching fireworks on the balcony, I am getting out a position on Coinbase. So speaking about myself, when I was talking about the possible interest in waiting for the new year to kick that tax burden down the road and offload positions. And so I actually sold Solana. I was able to sell it, I think just over 100. And that for me was a really good trade because I held on to it for a long time. And that's not something I traditionally do unless I think we're in a sort of rip-roaring bull market. And I still think that's a little bit early. I think the market is possibly a little bit ahead of itself, but we'll get into that. So a few alts, namely Solana, Celestia, and then my opinion on the AI sector remains the same. I think that you want to focus on new pairs with limited price history, low unit cost. Obviously not, that implies there's really no significant amount of bag holders. Obviously they can be early investors, low float, ideally, if we're talking about things that are going to get moving. And just as per the times, what is the most novel thing right now? I think AGI, AI, all these things are going to be picking up steam over the next few years. So needless to say, anything that's AI related, if I'm not going over it right now, it's definitely something that is on my radar. All right, so I guess we'll just kind of take a look at things from the top down. Again, if you have been following me long enough, you know that when conditions change, my approach will change. So I'll zoom out a little bit more. My lower time frame charts will go from, minute charts, although I still like to look at tick charts when we're either in the middle of very significant moves to the upside or to the downside, or taking out key levels just to see the actual trading activity. But during these kind of conditions, when the market is moving on momentum, when we're seeing bigger plays, bigger rotations take place, I zoom out and my lower time frame charts become like a 30-minute to an hourly, and then I'm monitoring more things on like the 4-hour and the daily. Okay, so everything begins to scale up when I see that there's a trend change, and that the moves are going to scale up as well. Versus being in more range-bound conditions, having smaller rotations, less capital sort of getting in and out of position, and because of that, less fuel for the follow through. So I have VWAPs, right? So I'll look at VWAPs weekly, anchored VWAPs, right? So anchored VWAPs will be from a key level change, whether it's a key contextual break, whether it's a news piece, just to see how positioning has come on post that event, whether it's again a catalyst or the event being a break in market structure. And then just more statically or consistently, weekly, quarterly, yearly VWAPs, just to see where we're trading with respect to where the bulk of the risk is being put on. And when you have a really strong trend, you're going to see that, we trade specifically, we trade around these VWAPs a certain way. We're going to remain extended from them. When we return back to them, we'll see that they offer sort of dynamic support and resistance. Those VWAPs are where a lot of the positioning is going to make a decision. You can just consider where most of the risk is isolated on average. It is, it's a broad stroke. It's not exactly, the most granular order flow data compared to looking at something like a footprint or a tick chart or volume-based periodicity, yada, yada, yada. Looking at the tape, looking at order book, blah, blah, blah. And I say blah, blah, blah because I'm going to try to keep this stream, again, like I said, relatively short. So big picture for BTC, we'll just start here. Like I said, prices are flat from where I left. Now, where I left doesn't mean shit, but we're still in a range, big picture, going all the way back to December, right? Going all the way back to 1st of December, we're talking about last month's high. So December high, that's right around 45K, pretty significant number. I would say it's a sort of key psychological level, big round number. We're still in that range, okay? What I do think is important, so I'm just going to go over some things that I think are important for BTC. And we're going to kind of war game this both ways, because I will say that after everything I say about flows, the things that I think are worthwhile or worth paying attention to, we're trading right now a week away from a major event. And all of this, honestly, like reading the tea leaves before a major event, it's a coin flip. It really is a coin flip at this point. And I don't want to say anything too firm because, as the saying goes, strong opinions loosely held. I think that loosely held part right now is the more operative portion of the phrase, right? So the interesting thing is price is in a range, but across the board, whether you're looking at Binance, whether you're looking at COINBASE, one thing I will say that the bulls have going for them, right? Because we'll play both sides. And I guess before I get into kind of hashing it out on both sides, right? Because then it just sounds like, you're wishy-washy and you're not coming to a decision. To be as transparent as possible, I am out of all of my alts with the exception of Flip, okay, which is underwater, Woo, which is not underwater, and a little bit of Solana left, but for the most part, it's negligible. So I sold the bulk of my Solana positioning, as I said, right when we struck New Year's, right, 3 minutes after, I was getting out of my position as much as I could by limit, and then finally marketed the rest out. So 3 minutes out, I was done. Okay. Let me get rid of this Outlook bullshit because we'll just leave that there for now. Hopefully you guys don't hear my daughter scream, "Mama," in the background. But as I was saying, I am going to be, and as I already am pretty close, as close to delta neutral going into this week or throughout the duration of this week until we have the ETF outcome. So what that means is my spot. So I was long from vacation. I shared that long setup after this major liquidation. That was just a very reflexive trade to take advantage of what occurs in market microstructure post a big wipe like this, which is one side just gets completely vacant and there's a vacuum in the book. So it doesn't take really any effort for the market to recover this level. It doesn't really mean anything directionally. It's almost a given that when you have a massive liquidation like this, takes out key levels in market structure, kind of cuts through the book like, a hot knife through butter, that the market's going to snap back if there's no continuation through the level. So you'll start to see a little bit of volume have a big impact, and that's your cue that there's really nothing in the way of price, and it's just going to fill out that inefficiency. So long from that, was long into it until today. Close that out actually an hour before the stream, and I'm going to start getting as flat as possible. I will be upfront with my options positioning as well, which will leave me with some delta exposure. I do have some essentially a risk reversal play on BTC. So I sold 50K strike calls for January 12th. And then I actually bought puts 35K, I think 36K, out of the money puts just in case there's some kind of massive tail event, right? So sold upside, bought downside. So some exposure there, not a ton of exposure. And then when it comes to ETH, I am long a call spread. So for January 26th expiration, I am long the 25, I think it was 25 or 24 strike. So 2400 strike, I think it was 2400 strike calls, and I sold the 3K calls, right? So January 26th. And that's it. Other than that, I'm riding pretty flat into the event. And I think that's a reasonable thing to do because, again, it could go either way. We could have a massive upset. I don't think that you would be able to sell that fast enough. And I also don't want to be outright short, right? Even though I think that there are a lot of things that do kind of personally bother me and things from experience that I think are, have a high probability of occurring. And that, that being that this event has been well known, we've been trading into it for a long time. The market is clearly long into it, regardless of what's happened recently. It's almost always the case that you buy the rumor, sell the news. Okay, this is something that is for news traders in the short term. I think you get a spike up. I think we sell off, we consolidate at a minimum for a couple months. And then I think long term, yes, this is a great thing. But I don't think it's something that happens fast. But a couple things to point out. Across the board, one thing that's taken place across all venues is we've traded back above, even though we're back in this range. So we're in this range, right? We are trading back above the high volume node across the board on every venue. So what that means is, prior to this markup, when you're trading from looking at this from left to right and price is favoring the downside and most of the volume has taken place towards, in this case, it was like 43.9. I think it was right around 43.9, the POC. When you're trading below that, I mean, it's a decent case to be made for bears being in control, right? Most of the volume coming in there. If you just took it half and half, right? You imagine that for most of the volume came in, anyone who sold is in better position than anyone who bought, right? Buyers from that level, if you consider just the high volume node, clearly underwater. And if you have that and you have no major change in positioning and open interest, nothing taking place yet, you could make a case for people actually holding underwater positions and us not really seeing the extent of a spill, and that volume and risk that was put on, that is sitting above you, potentially being something that could still come down the pipe and cause bigger issues. So the best thing that could happen actually ended up happening. We're trading back above that level. We reclaimed it, and it doesn't necessarily look like that is all soak now. So if you had all that volume coming up here, and you have absorption up here and prices trading lower, it looks like that was soaked. Okay, you are seeing soak. You're seeing soak on and off though, right? So there is some passive selling that's taking place for decent size, or at least it looks like there's some kind of limit chasing or passive selling taking place for decent size. And I'll get into that and why that could be significant, but why that's also, again, possibly just reading the tea leaves a little too much or giving too much credence to something that doesn't necessarily matter because it's just someone who's big who wants to get out of the market before the ETF. It doesn't necessarily have to have any bearing on the short-term, intermediate term, or long-term trend. So I don't want to talk about these things too much like they're that important, but again, they are things that they do stand out. So as I said, we're above 43.9, great across the board. Reclaim the high volume node in this range. That's good. I think that if you're trading above 44.5, then you're just going to see this attack these highs again. So pretty simple. A very cleanly defined range. There's your deviation. And if we're back above 44.5, I just think that it's more likely that we're going to attack this high again. Short-term trade, right? That can happen before the ETF. I would say that would probably happen before the ETF. Unless the market completely marked down now, I think that post ETF, initially after the announcement, you're going to get a spike either way. But like I said, if we look at a little bit more granular order flow stuff, and this is things that everyone uses now, CVDs, and I've just isolated for we're looking at Bitfinex and Coinbase, right? So Bitfinex and Coinbase. You could see that although price has been trading sideways, okay, CVDs have been up only, and they've been up only to, I think this is around the tune of 150 million at this point. So from that first period, 260, 130. So we're looking at 130 million roughly, right? And to isolate that, the high level here, price relatively flat, basically almost flat, right? For all intents and purposes, price has been flat. Those CVDs have been up only. So that means there's a buyer, right? But what that means is for $160 million worth of BTC, or 130, whatever it is, just say 100 if you want, that there's been no price impact to the upside. Okay, so what it means is the heavier hand is in the offer, right? So the limit seller, either one seller, multiple sellers, whatever, has been able to stifle any kind of market movement upward based on that buying. And what you could do is you could kind of just try to create standards for, again, you can't say that this is something that applies in all conditions because it's context dependent. You have to consider how the derivatives market has been trading too. If you have the derivatives market trading with the spot market, you don't want to fade that, whether it's to the upside or the downside. In this case, we have the derivatives market selling flat, and we have what looks like pretty sticky spot wall in the ask, right, in the offer. And price is flat, but there's a good amount of buying. What you could do is you could just start looking at prior periods where there was similar amount of buying and seeing what kind of market impact there was. And what you'll find is if you look at, periods where there was 100 million market bought over, say a week or a period of days, whatever it is, that there has been generally much more market impact. And that was lower in prices, right? So what we're seeing is now up here. And again, it's lining up chronologically, right, with the time of a major catalyst. It just looks like someone's getting out and they're doing a decent job, right? It also implies, though, that someone's buying, right? There's a bunch of buyers that are getting in. And it could just be, if you really want to be dumb, you could say maybe this is just one person TWAPing into one person selling, right? But either way, all we see is a bunch of buying, not a whole lot being rewarded for that. And again, prior, similar activity, more of a markup. So it's a matter of, I always talk about this. It's a matter of, the amount of work or effort that's coming in and the results, right? Having a lot of effort come in, you're not being able to move the weights, okay? So if you had, let's say, if you saw just, shits and giggles, someone buys 100,000 worth of BTC for the past 6 months, every time that happens, price marks up, whatever, 5 basis points, okay? And then suddenly someone buys $1 million worth of BTC and price marks up 2 basis points. And you got to think, what the fuck's going on? So someone is obviously selling for that to not move price at all. And that was just a very quick example, but you could create a ton of analogies for this case. More work, less results, right? So again, stickier to the upside. Someone's absorbing, whether it's multiple entities, it's one entity, it doesn't matter, right? One thing to point out, you've had a good amount of futures selling. You've had a good amount of spot buying as well. Up here until recently, basis, if we look at quarterlies, was like blown out. There's a period where, basis was, when we're looking at quarterlies, annualized basis trading over 20%, right? While prices were for that period. So if we look on the right, this is your annualized basis. This is that range going back to, we'll just go back to December 6th, right? For this December high. I mean, here it is. Okay. That's where it is. Annualized basis, 10%. Okay. Got all the way up to 20%, 22% on Binance while prices remain flat. So people were buying quarterlies, which is, has its benefits versus perps. You're paying a premium. So you're buying something higher. You're rolling, so you're selling high, buying higher again. But you don't have to worry about that. You don't have to worry about that faster interval funding rate, right? Because everyone's trading the perps, right? And it comes with that interest rate component. So when this gets really high, it's compelling to sell because you could lock in a really incredible carry trade, right? Basis trade. You're selling futures, buying spot. Arguably they should always converge over time. You have the risk of, there is basis risk, but it is a relatively risk-free trade. And it is, it's 20% annualized. I mean, it's, at some point it becomes more compelling to sell when you add in certain other things, again, based on context. We're leading into a major event. The market has been really euphoric the last couple of weeks. There has been plenty of top signs. You have your celebrities now too. Not to say this is a top, but it is, it's definitely what you would expect towards the top, right? Family members asking, we have a major event that the market has been buying up to, leading into. There's a lot of things that would compel someone to take advantage of that relatively risk-free trade. And it's usually not attractive because there's a higher opportunity cost, right? Why would you want to take that trade and short futures and buy spot, or just take that ARB when you could long shit coins and make, multiples that? Well, at some point it becomes more attractive. So needless to say, it also just will outperform anyone doing the same in traditional markets, right? Any similar carry trade setup, which you won't have something like that. But as a reminder, right, talking about all these little details, we're going into an ETF where anything can happen. All right, so I don't want to really read the tea leaves too much. I will just say that, short-term flows matter, long-term fundamentals matter. So long-term, looking at the ETF, you have to remember that Wall Street doesn't buy, they sell. So BlackRock is going to be trying to sell the shit out of this thing, okay? Every advisor, every small-time money manager, what have you, is going to be going to their clients trying to push, a modest allocation. They're going to want to make this thing a success. So I think over the long run, applying that consideration to a market that is very young, that has a low float, that still has a very skeptical base of people, right, that are not allocated, have no interest. I think if BlackRock is pushing it down their throats, we'll see their tunes change. And I think that passive bid is just what's required in this market to help it, if not, not move non-linearly, but just closer to linearly over time, and have that sort of positive drift that you would expect for something that's new. And I will just say also that to remember that once something is added to a portfolio, so once they add, 1% allocation, yeah, they'll rebalance if it outperforms, but it's never going to go back to zero, right? So if you have a portfolio manager and part of that portfolio construction is to have, 0.5% BTC or 1% exposure to BTC ETF, that's never going to come off. Okay. It's never going to be the case where they're suddenly like, okay, we're taking that out, unless you're talking about a completely different portfolio strategy, or again, you have different risk profiles between investors, and portfolio managers will account for that. And without getting into too much, my point is that for the most part, for who it's added, it will not be taken off. So that's BTC. I think that, again, for me, what I expect is in the short term, if we're able to trade back above 44,500, kind of almost where we are at right now, but I think 44,500 remains kind of the level that I'm looking at. I think that you could expect to target at least last month's high. So you have a $500 move ahead of you, if not, getting overthrow to what ultimately is the yearly highs so far, just under 46. Now, I don't see us selling off before the ETF, so I think this thing can continue to chop around sideways or grind up into it. But I do think, like I said, spike up on news. I expect us to sell and consolidate for a period after. And honestly, levels that I would really want to get involved in would be anywhere back down here in this gap. So anywhere close to 40. So between 40 and we'll say, 38, I think is a good buying opportunity. I can't see a situation where the market returns to those levels, returns to those levels and either bases out and shows absorption or returns there violently and doesn't offer a good buying opportunity. The violent return back to there is honestly better, similar to why this was a good buy. And that's because you're paid right away, right? You got to take your medicine, hit the buy button, but you're paid right away. So, it's almost like if you turned your head, you're in profit already, and you're substantially away from price if you bought this liquidation cascade, substantially away from your entry. The worst thing is, I keep hitting this fucking drawing tool, excuse me. The worst thing is if post ETF, we just chop down, right? We have like a pop up and then chop down. The problem with that is markets hate uncertainty, right? So you're a buyer and you're sitting underwater already. The market knows, I hate to sort of like anthropomorphize it, or I guess personify it. Would I say anthropomorphize? Would it be anthropomorphize or personify? It's understood that people panic lower, right? That as the market grinds down, that there is sort of a psychological knee-jerk reaction to that kind of behavior, that choppy behavior, right? Where all it takes is just someone continually pushing against the book to create, again, further moves down, get that momentum ignition going, and to perpetuate that, to keep that going, okay? So the worst thing that happened would be for prices to slowly grind down. I went into this in more detail. I'll share it on a thread. I'm not really doing justice to my explanation. The worst thing would be for prices to grind down, right? You buy, it looks like the dip, and then you're underwater, and you're rethinking this over and over again. So in that case, if we started grinding, you would want to see some substantial market structure printed, right? See us base out, on microstructure, and I hate to say microstructure, but micro market structure, and not market structure like the order book level, although you would be paying attention to absorption and signs that would show up there. But price begin to build a base. So the best condition is when you get a big spill and you have that sort of once in a few weeks buying opportunity when you just have to kind of suck it up. But worst case, after ETF, spike up, grind down. All right, so again, short-term trade, though, to the upside, 44,500 looks opportune. I don't see a situation where we have another setup like this before the ETF. It's the final week. So this stream is actually not that useful because there's not a whole lot you could say with certainty about plans because they're going to be changing very soon. Again, though, below 40K, I think a return there. We haven't really revisited the extreme on the other side of this range. I think you would be at least prompted with the same opportunity you were, right, at the high side, at the high of this level, okay? So something like 40K being swiped, right, price basing out, and you see hopefully signs of absorption there, sellers getting off sides, yada, 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 and you'd have at least a play, I think, back to mid-range or back to that 42,500 level. Who knows if we get that, though? I don't want to talk too firmly about any price levels right now with BTC because it makes no sense to. It might as well just be the case that you react rather than try to predict. As far as, let's just look at the options market real quick. I would not be blind. I would not be at this point, honestly. So calls getting paid, right? Even though this range we're in a range. You can see that implied volatility has continued to trend up. So even though we do see this stretch, so between implied volatility, we're looking at short term, it's all short term, right? 30-day, 7-day. Even though we're sitting above realized volatility, I definitely wouldn't be selling any volatility right now. I would not be saying that volatility is rich or expensive. I would not be selling this. I don't think this market or markets really price in catalysts completely, right? So any kind of event like this, there's massive jump risk. And for that reason, also, I'd be really careful for anyone who is shorting or hedging on exchanges. I would still have a stop. You might think your liquidation is very far away. I would definitely want to be at the computer all week. There is a possibility that the book's just empty, right? Book's just empty and you see massive wicks on exchanges. And just be careful. That's all I'll say. Make sure that your stop is not set to last price. Make sure it is not set to last price. Otherwise, you could benefit from that, obviously, if you're trying to get in positions, but you don't want to get blown out on possibly maybe one of the best catalysts, right, at the beginning. Although I hate to say it's the beginning because that's one of the reasons why I'm getting worried, because everyone keeps talking about how it's the beginning when it's clearly not. It's not the beginning. We've been trending now and moving up for almost all of a year in some capacity, right? Depending on how zoomed out you are. And for the better part of a quarter, we've been moving up only. Okay, so there's that. So that's BTC. We'll just talk about things a little bit more bigger picture things. So for the first time in 2 years, alt open interest exceeded Bitcoin open interest. So if we were to look at like, I think this is a good point worth making. Okay, make sure my mic is, just checking the chat real quick. So I talk about the pinch often, right? This is the most pinched things have become in the last 2 years. So we're talking about alt open interest. We'll just get rid of ETH because it's doing nothing. I'm still in ETH. So as long as ETH is holding above 2150, I'm still confident in ETH. I just think it's going to be a while. Like I've said many times, big ships turn slowly. And I think once BTC ETF is kind of old news, I think people are going to look toward ETH. And remember, this market is not efficient. So if you're saying, why aren't people doing it more now? Well, you haven't been around long enough. But we had alt open interest exceed Bitcoin open interest. So from a dominant standpoint, that's pretty big, right? First time in 2 years. The problem with this means that there is a decent amount of hidden leverage in the system. Okay, there's not enough bids to go around in alts if we were going to have some kind of massive event to the downside. So the market is really spread out, and there's a good amount of leverage in the market still, even though we've had a substantial wipe. So, we had a big wipe in open interest recently. We went from 32 billion to 25 billion across the entire market. Excluding BTC and ETH, we went from 13 billion to 8 billion. All right. I think what happens after this, after you have a huge wipe, we had funding come off across the board too. So that's great, right? So if you look at the futures market and we look at, now we go to market, and we look at the funding, right? It's first time in a while, right? So first time in a while that we've had funding really cool off. So, it's really positive. So this, you might see this persist and people start to say, okay, that you're starting to bet on the downside, right? So longs are closed out, things are healthy again. It also could be a sign of exhaustion, right? When there's just not as much firepower anymore to buy, because we can't just say that the spot market is the only thing that matters. No, this is after a big liquidation move like this, it's a lot of people that are just dead. Okay, there's a lot of people that are just absolutely wiped out. So I think the assumption a lot of times is now this is the immediate dip to buy because we've had a big OI wipe. And to put that in perspective, this is OI global, right? Well, excuse me, this is global OI excluding ETH and BTC. So again, it was big for everything. It's massive for alts, right? 33% wipe. So the assumption is now, all right, this is the dip to buy, right? What happens is I think this just sets up for another wipe. I think you get sort of that things are back to normal bounce, and that's everyone who still is decent getting back in a position, and that doesn't get rewarded, and we see that get wiped out too. So I think the more likely thing that occurs after a move like this is base case, the market just moves sideways, right? So we chop around rather than just trend resumption, right? Unless the ETF launches and we see every single day after listing, it's doing ridiculous numbers. And then the market's just frothing, and happy to pay any kind of funding. And again, risk is just totally amplified. I don't think that that's going to be the case. I think more often than not, big wipes like this. So again, I'll just add everything again. So you see the total value. So 35 down to 25, 32 down to 22. So again, total OI wiped, 22%. That's big. Still there's a lot of exposure in the system. All right. A lot of futures exposure, a lot of open interest. It's followed the trend, so that's good. You get a bigger wipe than you had in a corresponding move down if you look at the total market cap. If we look at alts, for example, the total market cap, let's go back to this. So the last time that alt open interest was this high was the all-time high. All right. Hasn't been able to hold sort of this 8 billion level. Prior all-time high open interest was this high when alts were at a $1 trillion market cap. All right. So this is still really extended because we're nowhere near those prices. We are one less exchange, and open interest is still jacked up. So it came down a lot, but I think this usually sort of precedes further periods of chop and maybe even more coming off. A lot of times, wipes like this signal a trend change. But you just have to remember that the trend, there's not just two trends, up or down. There's three trends. A market that's moving up, a market that's moving down, and a market that's moving sideways. So if it's going to change a trend, I think that, at least I would expect us to move sideways. All right. What other things to point out? Before this, so before we had this occur, right? So we have people possibly wanting to take advantage of that basis trade. We have spot absorption taking place. We have people taking profit into an event. But before this, we actually had a decent amount of, so I have some of the miners on another AI list. We had a decent amount of risk taking off in miners and crypto stocks. So anything that's a proxy around crypto that trades on either the NYSE or the NASDAQ. So the stocks, right, whether they're miners or funds, right, we saw a significant pullback across the board, pretty much at a minimum double digits, 20% pullbacks. So I think the logic is that this was front running, and the same thing happened with coin. Okay, but this actually began and continued into the new year. So you could have profit taking, like I said, into a new tax year. But still, it's worth noting that it's possible that some of the exposure into this ETF trade has been coming off reasonably so, right? But things cooled off. Things cooled off more than they have been in a long time. So I am, again, like I said, not making any really strong predictions by any means. I think it's a good time to just hop on a stream and chat about what I'm seeing, but we're going to know pretty soon, right? We're going to know whether it's sell the news. And I just suggest that everyone is at their computer rather than being away, and you'll have a chance to take advantage of what will at least be some really good trading opportunities. Okay, so let me get rid of some of this stuff. Down. Yeah, I mean, if we look at just funding across the board, even, just alts on Velo right now, if we annualize them, I mean, most of these have come down tremendously. We were in the triple digits in alts. So Bybit, right, home of the apes, right, although that's changed significantly. BNB, very negative right now, but Bybit was, everything was basically 100%. So large caps, mid caps, small caps, you might expect those to be a little bit wider in terms of how they trade with funding wise. But almost everything has really come down. The highest print, TRB, Blaze, Astro. Other than that, again, there was a really nice haircut that took place. You can't take too much from it other than that, right? The market was very long. The market was very leveraged, and it still, though, has a significant amount of leverage that is to be observed. So, and this is just trading light. So you had that Coinbase presence in the bid that's been working for this entire move up for the most part. And now it's kind of vacant. You're going to see books probably clear out into this week, though. This is going to be a very toxic event, and there's just a chance you just see overall liquidity levels really drop, right? If this was around the BitMEX days, this would be the biggest Darth Maul of a generation setting up. All right, so things I'm looking at: Solana, as I said, say TIA. When it comes to Solana, I can see this being a top for a long time, right? I could say, again, like I said, this stream we're going to know a lot after this week, right? Because I think that Bitcoin is going to dictate, and ETH, right? It's going to dictate how this market feels moving forward. If things really just begin to shit the bed, I don't think you're going to see alts outperform, right? So it's path dependent. Okay, so Solana, I mean, it hit 126. I think this is looking at a much deeper pullback, honestly. So I personally, though, I'm not saying Solana's dead. I'm not saying any of that. But I do think from a risk reward standpoint, this is not the best area to start scaling in. I think I would want to start looking at Solana down around and under 80. I mean, for most alts, if we're going to see large corrections in alts, if it hasn't corrected 80% yet or 90% yet, I'm not even going to bother. For things like this, we're 27% off the highs. I don't see a reason why this won't come down even further, even though, again, regardless of what everyone's opinion is on, Solana fundamentally, where its place is in crypto, blah, 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 blah. This was a very crowded trade, and I think there's a good amount that's still left to come off. If this comes down and trades around 80, I mean, if we look at this from a derivative standpoint, it's not like, so if we just go to Solana, and if you look at it on Velo, it doesn't have the extent of exchanges, but there was a very significant wipe in open interest. It takes us back down to levels that we were at in open interest when we were down around 80. So that's good, right? You see a lot of air taken out of that. I mean, it's not complete though, right? I don't think that that's it. I think that this chops around. I would like to see it. Our, best case scenario, this chops around 80, and we see, and this goes all the way back to, March 22 lows, which I don't think are significant levels now, but it's a level that the market might focus on. Chop and development. So because of the extent of this move, and if I'm right about the extent of sideways that we go through and reconsolidation and reaccumulation, something that moves for a period of months would not surprise me, right? But you want to see some kind of strong base built. All right, so maybe a period of 2 months, 3 months, a quarter. And I think that there'll be some signs across the market as whether or not there's still capital to be deployed and how the ETF is trading. And I think that, you're going to be really stupid if you don't get into Solana at that point, if things are looking good and Solana is consolidating around 80. And then that's close to a 40% pullback. And it looks good at that point. From a market structure standpoint, if we look at just how this trend has behaved the entire time, moving averages, I've always said 20-period moving average, great. Below the 20 period, we are below quarterly, monthly VWAP. So by all means, in terms of just local risk, we've lost it. If you look at this from a market structure standpoint, we're now making a lower low, lower high, right? So things have arguably changed. And I think when they change for a little bit here. It's tough to really stop this from rolling a little bit more after something like this has occurred. But needless to say, I think if it gets around 80, that's a good buy. How would I change my tune? Well, let's say ETF approved, everything is just ripping and roaring. And, Solana is starting to retake prior weekly, prior monthly levels, more significantly, more recently, starting to trade back above where most of the risk was put on the last month, last week, and since the beginning of this year. So, that could be us trading back above 100 and beginning to base out, right? Basing out back above 100, see a reclaim in market structure on the daily. I don't think that that's the case. So I don't, I'm going to be biased and say I don't think that's the case and don't think I have to prepare too much for that. As far as say, I think this is something that, again, unit bias, new coin, no bag holders yet. Could be, who knows? Imagine if this is a top and then you have to deal with all those bag holders for the next few years. But something that I absolutely want a piece of. But in terms of market structure, it's broken, right? So again, just looking at the trend over time, holding that 20-period moving average, trading back, at the other extreme of VWAPs, right, that have been significant to this time. It's not that they're it's not like they're causing anything, right? It's a point of where we're trading in relation to risk, right? The market is still is people are just reaching for it, right? Not getting deep pullbacks. And now it's the opposite, right? You're trading below where risk is averaged out. You're trading at the other standard deviation extreme. You have a change in market structure right here, right? For my TA friends, right? You're making a new low, possibly a lower high. I think this is a good sell in this region, honestly. And I think that as far as where I would want to buy, I think that 50 level makes a lot of sense. So big round number like that into that gap right here. All right, we already cleaned out one gap. But I think if this is going to trade lower, I would want to see it develop, again, similar to Solana, right? So trade back down. I mean, hopefully it doesn't have to trade all the way back down to 30 cents. But like I said, I mean, if it hasn't put in a massive pullback yet, this is only 27% off the highs. Give us closer to 50% pullback. Come to that magic round number. We'll see. Either way, I think that this looks like it's possibly setting up for a better short in the short term. Depending on broader market flows. But I would need to see more development, right? So if we're looking at this on the daily, some kind of structure built similar to what I was talking about with Solana, consolidation, reclaim, for example, let's say it was just to happen immediately here. We swipe these lows, trade back above, right, last month's high, and then we're starting to constructively move higher. Well, then maybe that's a case that, I'm wrong and this thing has more juice in it. If it starts retrading above what is so far this year's VWAP and this week's VWAP, which is around 70, 72, 7, 73, well, maybe we reattack the highs. I just think that this is something that I want to have a longer position in than just a couple days, right? So I think we're looking at possible better buying opportunities setting up over the next couple months. And then lastly, TIA. Aside from the AI pairs that I said that I'm interested in render and fetch, Tau, but I think that there's more meaningful pullbacks ahead. Celestia is the only thing actually where you still have what is possibly a continuation setup, right? Because you have market ranging between 11 and say roughly 15. We haven't traded, we have this low right here holding the top side of that structure, still holding VWAPs. Market structure still relatively intact, high time frame wise, locally beginning to change, right? So locally, possibly a lower high in the making here. Trading back below last month's high, trading back in sort of a range extreme. If we look at these, and we'll go back to say in a second, again, open interest. For this, not really that wiped. Premium starting to go negative, which I said, again, could be a case of there not being as much fuel to buy, right? So I wouldn't take that as, sellers are coming in and it's going to squeeze further. I'd be careful with that. But needless to say, this isn't completely broken down yet. But I think, if we see a larger pullback across the board, we have more consolidation, I would want to get involved closer to 10 again, right? I mean, that'd be the first. Some kind of pullback through this level, clearing the bottom of this range again, some kind of longer consolidation, and then if we're trading back below 10 and then we're trading again back in this structure, I think that maybe that's the extent, and we'll look for some kind of long opportunities there. Just something that is at the top of my radar, and I want a position in, and I want a longer term position in, similar to the one I built in Solana, going back to earlier, last quarter essentially. And then lastly, this might surprise people. Just seeing if I miss anything with TIA. I don't think from an order flow standpoint, looking at Delta, I don't think there's really anything that says to me right now that there's any major divergence in spot buying and spot or perp behavior for either Say or for Celestia, which kind of further affirms to me that we're looking at more hidden leverage in the system and more corrections to come and profit taking place rather than just sellers stepping in and trying to bet against a trend yet. So I don't want to I don't want to stand in the way of any of these yet, really. I don't think that they're, I don't think they have the juice right now. What else? Oh, last but not least, BONK. And this is going to surprise people. So BONK, I think, is going to put in the euthanasia roller coaster. I think that, where did it go? Here we go. I think that BONK has put in the high for a really long time. I'm going to piss a lot of people off saying that. Meme coins, to me, are not, there's no way you could really make any of them have lasting significance or have sort of the lore that came naturally for something like Dogecoin, right? And has been tested through time, and it's still not even. It's not like it's an incredible returning coin. Meme coins will never, to me, have substance that will carry them the way that you'll see things carried that actually have some kind of fundamental promise attached to them, or utility, or it's not even, I can't say cult, because BTC has a significant cult following, but memes do too. But it just will never have the substance, in my opinion, to really carry it beyond its initial blow-off phase. It's just my opinion. I know that people have like modeled how this is significant change in society and meme coins are going to, be incredible investments. I just don't fucking see it. I think that's super dumb. All right. To put it plainly. But needless to say, although I think this is going to do something like this over time, I do think it's important pointing out that this is very big, right? That any kind of bounce would be within reason. All right. So for this, I mean, to be fair, this is just shitting the bed right now. All right. So if we look at BONK, yes, open interest has come off significantly, but big picture, still quite elevated, right? Still a significant amount of risk in this. You still have people buying the dip all the way down. This is the most painful kind of setup, because you have people buying it all the way down, and the market panics to the downside. It doesn't take much to know that after a bounce like this, that all the market has to do is move slightly below another low to continue to puke lower, while people continue to fade this and try to catch a falling knife. Personally, I need to see this go sideways for a long time. And honestly, anywhere within this region, and it's kind of, it's close between 10 and 5. So we'll just talk about in eliminating all those other digits. But from the all-time high to there, we're currently at 70% pullback. This puts us slightly over 80. I mean, I said alts can go all the way down to 90, and most of them will. So I think it's just a matter of when that does that, and not if. But I do think that this is going to, because of the lore and how diehard people are for it, that once it starts basing out and perking up again, it's going to have a really nice echo bubble. And that could be in the next couple months, by all means. And it's not, to put things in perspective, let's say that it comes, where I sort of am going to start paying most attention, which again, it's right here, but it's not here. That's my point. 10 is here, but it's not here. So what I mean is something like this, that kind of 1 low, 2 low, 3 low, this is just setting up for another puke lower. All right. So you have a pocket of liquidity there. Why is it a pocket of liquidity? Well, anyone here, they haven't been tested yet. Right. So the market, I would expect at least some kind of 10% spike. So you're looking at least, and you know what that turns into. It turns into another 20% drop. Now, that doesn't have to happen, but either way, I'm not buying this while it's doing anything like this for just a period of weeks. I want to see that this consolidates for at least a month or two. So let's say you get that spike through down to 8, down to 5, whatever it is. Market bases out, okay? See some kind of sweep. And then we're retaking prior levels, right? And remaining bid. It's not going to take much for the market to get really excited and for this to put in a 50, 100% move. And even from there, though, the point is that is still, right, well off the highs. So I don't think we're going back to the highs in this for a very, very long time, if at all. And I'll say that on record. I don't think there's anything promising about meme coins. I think people are deluding themselves if they think so. I think the one potential that meme coins have is their first load, right? Shooting their first shot. And what that might do is gain attention for a protocol, whether, in this case, Solana, it could be any other protocol. I think memes and things like this have the potential to act as a flare, and that's it. But what do flares do? They just burn out, okay? So it shot its load. I think that it worked, right? Solana is massively popular right now. I don't think that it ever flips ETH. But yeah, this is going to offer, I think, an incredible bounce opportunity. I don't think it's right here. I think we're getting close, but I need to see this move sideways for a little while. Where would I be wrong with this? I mean, it's hard to say that I would even care if this traded even slightly higher and start to second guess myself. I just think this path is now preordained. All right. You have a lot of bag holders now that are going to be really happy to get out at break even. They might be confident, but they're going to say, you know, all right, this is nice, but I'd rather, you know, I'd rather wait a little bit and see how this behaves. Let me sell it at break even. Let me sell if I'm up 10%. So you have all of that ahead of you because of this kind of frenzy that was created behind this move. Now, from an open interest standpoint, from a future standpoint, yeah, a lot has come off, but don't forget, there's a lot of positioning in this before either of those instruments or any of those instruments existed. So there's a lot to work with. Let's say this traded and started retaking levels. I don't know. I'd still need to see some kind of higher time frame, higher low form. Anyway, I think that covers it. One last thing I'll say is that there's a bunch of new links below. And when I say new, I mean that they have new bonuses. So that includes Bybit, that includes Femex, that includes Woo and Synquote. So you have your pick between KYC and non-KYC. And I will just say that everything will eventually be KYC. So don't be surprised. So you have to use obviously what's available to you. If you're in the United States, you know, you're kind of screwed, but it is what it is. There's a lot of people that watch that aren't. So hit the like button. Hope you guys enjoyed the stream. I think that more or less covers it. Kept it at an hour, which is very impressive. And I will see you next Sunday after the ETF. All right.